Excellent, excellent. Okay. Hi all, and welcome to another edition of What's Moving the Markets by Phillip Konchar for FxPro. I'll wait for a couple more minutes for people to come in and join us properly, and I'll try and see if I can get you into the actual chat rooms. So I just want to check if you can see the actual page with the FxPro logo and my details on. Just checking. Excellent. Damien, yeah, all good, all clear, excellent audio, great, brilliant. Okay, guys, well, hi and welcome yet again to another edition of What's Moving the Markets for FxPro by Phillip Konchar. And let's start this very quickly with a disclaimer. If you've seen any of these broadcasts, I'll run through these few slides very quickly because it's a fairly small group today. So hopefully we can make it nice and informal for you guys. So if you have any questions, feel free ask in a question section. If you want me to cover anything in particular, also ask. If there is something that's not clear, also please comment, and that'll make it much easier for me as well. So big legal information and a disclaimer. You all know that FxPro are execution only brokerage. They're not advisory brokerage, and as such you should really understand that spread betting and CFDs are leveraged products and the risk that they carry. So in the sense that anything that we are talking about here is available in a public domain, and these are our opinions and experiences only. When we are analyzing the markets, we are not advising you to do anything. FxPro also offer full regulation, FCA. They have negative balance protection, segregated accounts, and protected client funds. This is me, so any information that I share with you here are basically just my views and opinions, and if I do get excited about anything in particular, I'm not advising you to do anything, and hopefully what we're talking about here will enable you to make your own informed decisions. Some of the basic trading rules for new traders. I don't know how many of you have seen this slide before, but I will run through this very quickly. So I'm not recognizing all the names, but basically never trade anything that you don't understand 100% of the time. Never lose more than 1% of your trading capital on any one trade. So basically preset the acceptable level of risk, never add to a losing trade in the direction of the trend. That's always self-explanatory, and we'll be looking at some trends a little bit later on. Look for a low risk, high reward trades or high probability setups. When you don't have trades, when you don't have signals, don't trade. Trade your plan, your system, your signals, the chart, and the price action, and not your opinions, bias, or predictions. And this is quite important because trade what you see, not what you believe. Find a trading methodology that fits your personality. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. The size of your winning and losing trades will determine your trading success, and your risk management rules will determine the success of your technical trading system. Now, do you guys have any questions on what we've covered so far? I'll go back to the disclaimer a little bit later, but I think it's quite important for us to cover a few of these basic points. So before we go into the actual markets, I just want to check. Okay, Do you have any questions? Do you have any requests, guys? Do you want to see anything? It's a fairly small group today, so feel free, ask, and I'll be more than happy to talk about it, I suppose. Okay, so let's start with a couple of things first. So if you go to the FxPro landing page, under the trading tools, you will have the economic calendar, and markets were impacted over the past several days by a number of not earnings. I didn't mean earnings. I wanted economic calendar, which is this one here. By a number of important news and data points that were impacting a market volatility. So in particular today, from the US point of view, we received retail sales data which came in below expectations, and we also had PPI data, and that came in line with expectations. So the actual US dollar currency strengthened a bit initially on those news. And then we had a fairly big news relating to crude oil inventories, and I'll show you how that basically. Actually, let me show you what happened with. So when we get that PPI data, we initially had a big spike higher in dollar, and then subsequently it was faded. As a result of that, we had a sell-off in euro, sell-off in cable, and dollar yen is bouncing off the lows now. It was initially rallying, and then it's pulling back now. We had a gold bouncing off the lows, and then we had a fairly big move in WTI crude on crude oil inventories data that came in. So at 2:30, normally you would get this crude oil inventories data at 3:30 in the afternoon, but basically because of the time difference between the States and the UK, they came in an hour earlier. And this report was showing the amount of crude oil in reserves, i.e. in inventories in US over the past 7 days. And the expectations were that they will show a build of roughly around 2 million barrels. The previous week, it was showing a build of 2.4 million barrels, but actually it showed a 5 million barrels, which is substantially more than what market expected, and that caused crude oil to sell off substantially initially. So let me show you how what happened here with the crude oil. So when that announcement came, you saw this big massive flash lower, which tested these lows, and it's now bouncing that previous support, now newly found resistance, a very important level at this 60-90 area, and I'll talk to you about it in more detail. But a huge reaction, and now a reversal of that inventories data. So if you're trading crude oil, if you're trading energy, if you're trading Canadian dollar, that's likely to be impacted as well. Is this all okay, guys? Am I covering what you need, or is this a bit too top level for you? Is it too fundamental? Do you want to know more about technicals? You tell me, you talk to me, and then we can talk about that as well. So the other thing that is useful to keep an eye on as well from the economic data for the rest of these for the rest of this week, i.e. for tomorrow and Friday. So tomorrow we have very little data, very little data in the afternoon relating to the US. We have some import data, import prices, nothing major. They're all fairly minor and medium importance. And then on Friday at 10 o'clock in the morning UK time, we have consumer price index for the Eurozone itself. And this particular data is released by Eurostat, and it measures price movements by comparison between the retail prices of a representative shopping basket. So the core CPI is a closely watched indicator which measures inflation, and European Central Bank is keeping an eye on it. So generally, if we have a high reading, if we have higher than anticipated or so on, that's a positive or bullish for the euro currency crosses. And if we see a negative reading, that's negative for the euro currency crosses. And that's it for the rest of the week from the economic calendar point of view. So let me just show you how this translates in today's markets, and let me show you what this might mean to you. So you're all fairly quiet. Let me know, are you trading FX? Are you trading equity indices? Are you trading commodities? What do you normally trade? And then I can try and cover that. But to begin with, John, I think somebody's typing something, so let's see. So majority of the people tend to trade FX and so on. So here we go. Let's talk about a US dollar index. And if you're not familiar with this financial instrument, this is the index that follows the movement of US dollar against the basket of 6 other currencies. And it's a fairly important financial instrument to watch, because this financial instrument is keeping an eye on the movement of US dollar against John is trading. Okay, so let's start with FX. Thank you, John. Thank you for sharing. So FX traders are closely watching this financial instrument for the clues on US dollar currency strength and weakness. So this particular currency index follows the movement of US dollar against 6 other currencies, mainly against euro, against sterling, against Swiss, against Japanese yen, Norwegian krona, and Canadian dollar. So it's a fairly big and heavy index, and you can see that dollar has been weakening against all of these 6 currencies. So if this is falling, that means dollar is weakening for quite some time. And market is anticipating future rate hikes, 3 of them, by Federal Reserve, and that news is almost priced in. So the current price action, and what you're seeing here, this is a weekly time frame. So each one of these candles is 1 trading week. So we have a sequence of lower high. So there's a shoulder, head, and shoulder. So high, 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 high. So lower highs and lower lows. We also have these moving averages that I've applied. These are 20 period moving average, 50 period moving average, and 200 period moving average. So the current price action is below all 3 major or closely watched moving averages as well. So from the daily point of view, we can also draw a number of trend lines. So there is one trend line going here, which is that longer term one, and then there is this one here, which is a slightly shorter term one, and then we have this one here, which is a really short term one. So this appears to be a double bottom, and the dollar is attempting to break out higher, although it's capped by this falling resistance trend line. So if we see a US dollar index price inability to break through this resistance, we can say with certain amount of conviction that this is still downtrending. It's still downtrending. So if I go into a 4-hourly time frame chart, this will tell you a little bit more that you need to know. So the 4-hourly price action is coiling, and today's data initially caused US dollar to try and move higher. So majority of the traders who are trading this or keeping an eye on this are watching on two levels. So the first one is around here, which is 90. So the current price is 89.70, 89.68. So 90 is a big resistance, and the initial support is down here at 89.45, 89.30, 89.27. So this is the big support as well. So if this coiling price action breaks to the upside, so let's say Fed comes in and says something hawkish, and then we see a breakout here, and the price stays above that level and starts rallying higher, a break above 90 would trigger some buying above that level. Most of the people who are sitting in a bullish camp would be looking to put their stop losses down here, and they would be looking to take profit up here where this 90, 80 and 91, maybe even 91. And if I can bring you back to this longer term time frame, which is a daily, that's that trend line level as well. And then above here we have the cluster of previous lows and a cluster of previous lows. So when that price hits that level, it's likely that these people who are sitting in a bullish camp would likely be closing their positions or covering their positions. So there we could see some consolidation here. So that will be the bullish scenario. Okay, that bullish scenario also can work out because when you take the widest point of this consolidation here, this coiling price action, and extend it on the breakout level, gives you the same zone of interest, 90, 78, 91. So that will be the bullish scenario. Now, the bearish scenario would be if, for whichever reason, we see a loss of this support and the price dips lower and tests this initial support and closes below that, at least in 4 hourly or maybe end of day time frame, and does something like this. Okay, so loses support and closes below this 89, 45, 89, 30. Then bears are in control, and bears are looking to short, okay, with the view to put their stop losses up here around 89, 88, 90, and they would likely be looking to take profit down here around 88, maybe even 87.43. Now, why am I telling you this? I'm telling you this because I want you to see the way this financial instrument might impact all the other currency pairs that you are looking at. So, if the dollar index breaks to the upside, that would be seen as very bullish for dollar yen, dollar CAD, dollar Swiss, anything dollar led. If this breaks to the upside, this would be bearish for euro dollar, cable, for Aussie dollar, for anything else against the dollar. The opposite is also true. If dollar index breaks to the downside and loses this support and starts selling off further, that's indicating substantial US dollar weakness. Then we could see euro dollar rally. We could potentially see cable rally. We could potentially see Australian dollar rally, New Zealand dollar rally, and so on. You're getting the gist of what I'm trying to tell you. So this is a very, very important financial instrument to keep an eye on because it's quite telling to where the direction of the dollar strength and weaknesses. So let's translate this into euro dollar, cable, dollar yen. Euro sterling is coming to a very nice level, this 88.50. It's a very, very nice level as well that we should be keeping an eye on. And then if you want me, I can talk to you about gold and Dow Jones, S&P, FTSE. You're all very quiet, so I'm not really sure what you need to know, but I'll try and cover currencies initially, and then if you have requests for something else, I'll do that as well. So let's talk about a euro dollar now. So the euro dollar from the daily point of view is nicely uptrending. Although when you see this current daily range here, it's a little bit challenging to say the least. We can see that this selling pressure here with the big wicks is pointing to a resistance at these areas at the moment, and inability of the price of euro dollar to break out higher. And the reason why they are important is because they are really based in a higher time frame. So let me show you what I mean by that. So if I go into a weekly or monthly, you can see that we have a 200 period moving average. This orange line here, I don't know if you can see it or not. So you can see that daily price is hitting monthly 200 period moving average, and it's unable to break out higher. You can see that on a monthly basis, this is creating inside bar, or a bearish piercing, as some people might call it as well. So that 200 period moving average is acting as a significant level of interest for the traders as such. Now, if we go back to a daily, so we know that daily is uptrending and weekly is uptrending, but we are coming to some monthly. Okay, I have a few questions. Let me just see this. Okay, we have somebody who wants to know a little bit about gold. Fine. Well, John, it's a good question. John is saying he would like to know what moves the gold, and yet again, gold is sold in US dollars. And if dollar index rallies, that normally pushes a downward pressure in gold. If dollar index sells off, that normally indicates gold bullishness and gold rallies. But it's not that simple. There's few other bits and pieces as well, especially if you have equity indices selling off and volatility increasing, then people are taking money out of equities and piling it into safety. And safety is gold and also Japanese yen, and then gold rallies. So when dollar sells off, gold rallies. When equity indices are selling off, gold rallies. So that's usually the way it works. But I'll talk to you about some gold levels. The important level for you for gold is at 1320, and I'll show you the reason why. But let me just go and finish a euro dollar for now. So this is a daily time frame, guys, and what we are seeing here is we are seeing that the daily time frame is creating a sequence of selling pressure here. So we have inside bar here, we have a bearish engulfing here, then we have a star reversal here with 5 days of rallying, spinning top here with a dodge with a wicks on either side, followed by a red candle. So the combination of these three candles is known as a star reversal, and it's normally indicating a fairly bearish reversal as well. So if all of this stays intact and the price breaks to the downside, and what I mean by that is in order for the bearish scenario, to play out, is this support here needs to be lost. Okay, so the initial support to the downside for a euro dollar is at these lows here, 123, nice and round number, and we are capped by 124, 124.10, 124.60 on the upside from the daily point of view. So bears are in control below this shaded area here, because we can draw a resistance trend line. It's too early for all of that. You can use the closing prices or the wicks, whichever way you want, but that's where they're looking at. Now, if the price stays below that level, it indicates that bears are in control, and potentially we could see a spike lower into this zone first, which is 123, 122.70. Only a confirmed loss of that level could potentially target this zone here, which is at 122.16, 121.80. So this area is hugely important because it represents a neckline of this triple top, or a shoulder, head and shoulder, which might develop. So the only way for this current price action and consolidation to create this topping reversal pattern is if we see a substantial selling pressure and a red candle closes below that shaded area, and at least in 4-hourly or end of day time frame, and then we see something like this. Then we have a sequence of lower highs, and then the previous support is tested from underneath, and confirmed as a newly found resistance, and then we can see a further selling pressure. Now, Euro reacted bullishly. Euro initially reacted bullishly during the last ECB rate decision and a press conference, because Central European Bank removed the segment of the statement which says we might carry on with the bond purchases beyond the forecasted end date in September if required, or we might extend it at some point in future. So they removed that, and that usually correlates to hawkishness for that central bank, and euro kind of rallied. And then Mario Draghi had a press conference, and the euro sold off as a result of that as well. So from a longer term point of view, these are the key levels to keep an eye on. From a shorter term, 123, 122.60 support, capped by 124, 24.60. If we see a confirmed breakout above 124.60, then bulls in control, and potentially we could see a spike higher towards 125, maybe even 126 on the upside. Alternatively, if we see a loss of this area here, bears are in control, potentially targeting this additional support at 122.16, 121.70. Only a confirmed loss of that level and end of day close below 121.80 would indicate that this triple top or a shoulder head and shoulder pattern is in play, potentially targeting further downside supports towards 120. 120.60, even 119, 118 over the long term. So this is a 4-hourly and this is hourly. Guys, I don't really know how you trade. You're very quiet. So I'm only guessing here, and I'm basically using a higher time frames in order to show you what I mean. Okay, the other thing that let me just check, is this okay? That's brilliant. Okay. Now, let's talk about cable. And then we can correlate these two to euro sterling, because euro sterling is coming to a very nice level at 88.50 at the moment. Okay, so let's take a look at the sterling and see what's happening here. We can also see that sterling dollar is uptrending at the moment. So this is indicating a dollar weakness across the board. And if you remember, the first chart that we were looking was pointing to exactly the same outcome. There is a dollar weakness, okay? There is a dollar weakness. So sterling strength, dollar weakness. So we are coming to some important levels of interest for cable. And the reason why they are important is, if you remember Mark Carney, he was speaking a couple of weeks ago, and he basically said, guys, we are going to be increasing interest rates in UK much faster, much sooner than majority of the market analysts are expecting it. And also, the rates will go higher than majority of these analysts are forecasting. And that's usually seen as a fairly bullish for the currency. So that usually causes cable to rally. And in this case, this is sterling dollar. So if we are looking at this from the intraday point of view, we know we have weekly and daily rising trend line, and we have a sequence of lows here which are supporting it, and then we have sequence of highs here which are capping it. So this appears to be a breakout, a technical breakout, and the level that was triggering that breakout is at 139. So bullish above that level from end of day or intraday point of view, potentially targeting resistances up here at 140.30, 140.80. So let me just color this red. So we have this zone here. A confirmed breakout above that level would open up the way for the retest of this additional resistances towards 41.50 and then 42.43 on the upside as well. Now, alternatively, if we see a loss of this area here, then that would negate the bullishness. So something like this developing, something causing dollar to rally significantly and sterling to sell off. So maybe a significant Brexit development or the news. Recently, we know that we have a geopolitical story developing between Russia and UK as well. It could be a combination of different things. So if we see a flush lower and a 4-hourly or hourly close below this rising trend line and this shaded area at 139 and then something like this, then that would negate the bullishness and transfer the control over to bears who might be looking to test these further downsides towards 137.65, 130.36.50. So a key area for us to watch is at 139, nice and round number, potentially projecting the resistances up here. So this is a 4-hourly time frame. So let me just open this up in a much shorter term time frame and show you how this looks. Because from the shorter term time frame, this is potentially starting to develop a nice continuation pattern, but it's not there yet. It needs to be confirmed, and this is the pattern that I'm talking about. So what you're seeing here, this is the hourly time frame. So we know monthly is uptrending, daily is up, weekly is uptrending, daily is uptrending. So there is your prevailing trend. So that's the shaded area and the trend line. And these type of patterns, they're called bullish flags. They're normally seen in clearly defined uptrends, and they are normally sideways or falling against the overall trend. And the way they play out is the only way for them to be confirmed is if we see a confirmed breakout above this upper resistance, in this case 139.80 or thereabout, or something like that. A green candle closing here, breakout and the retest. And then what bullish traders would be looking to do is they would take the distance of this previous consolidation range and the breakout, and they would extend that to the upside to give them the projected target, which is in our case this 140.74 area as well. If for whichever reason we see a loss of support of a breakout and then subsequent return lower, or the initial return lower like so a rejection at this level and return lower, that would negate the bullishness, and it'll morph this pattern into something else, and then we are coming back to retest that support level that we were talking about before at 139. So this is cable from the intraday point of view in an hourly time frame. Okay, is this all okay, guys? Moving on. Can we talk about a euro sterling or a dollar yen or something like that? So while we were talking about euro dollar and sterling dollar, let's cover euro sterling, because loads of people are keeping an eye on that at the moment, and the reason why they're doing it is, let me just remove this. We know that euro sterling was trading sideways. It was ranging, for a very long time. So we're seeing this development here. Okay, so if you see this in a weekly time frame, it's uptrending, a sideways consolidation breakout, a long-term sideways consolidation breakout. There is another sideways consolidation. So the levels that majority of the traders are keeping an eye on are around 87 to 89, 87 to 89 for euro sterling. Now, there is something fairly substantial developing in euro sterling at the moment. So if we go to a daily time frame, okay, we can see that every time the price went up to 89, it sold, came down to 87, rallied to 89, sold to 87, 86.50, 89, and so on and so on. And what this appears to be, this appears to be a breakout above this trading range. And traders who have a longer term view would view this as a major retest of the breakout level. And as long as this 88.50 level hold support and some fresh buyers return, that would point to a breakout and a move higher, targeting 89, 89.70, 90. Some more speculative traders who are sitting in a bullish camp would be looking at 93, even 94 on the upside. So they're saying this is a new breakout, this is a new leg higher. Majority of the people who are looking to Sophia is saying, can you also do sterling Japanese yen? Thank you for asking, Sophia. I can, yes, that'll be great. So majority of the people who are sitting in this bullish camp are keeping a close eye on these lows down here, 87.70, 87.50 and so on. Because if the price does not break and move higher and instead does something like this, then majority of the people who are looking to trade long will have their stop losses down here. They would be triggered and then the price could move lower. So this would be considered to be a false breakout. And then euro dollar would come back into this trading range, inside of this trading range. And then this 87 area down here, or maybe even 86.50 might come in play. So really, really key level, interesting level for a euro sterling traders. So this would indicate to us a euro currency strength and a sterling weakness if we see a breakout and a move higher. Okay, if we see a reversal, that's sterling currency, British pound sterling strength, and euro weakness. This is the level. This is the key level to watch. Okay. Sophia was saying, can we look at sterling Japanese yen? It's a good one. Yes, it's a good one. Okay, so let me just get a sterling Japanese yen. Okay, well, this is sterling Japanese yen, and let me just take a longer term view. So this is, it's a bit of a beast, to be honest with you. It moves really, really fast and moves by a huge amount of points as well. So we have this, what appears to be a rising trend line and a loss of that trend line. And now the price is testing it from underneath. You can also see that I have a Fibonacci retracements from this low to this high, and this is giving us 23, 38, 50, and 61.8. So it's a much longer term time frame, and you cannot really trade in weekly, but I don't know how you trade, guys. So I'm only assuming that I need to show you these higher time frames. in order for me to qualify the trend, prevailing trend, and the sentiment in general. So this is the daily time frame for a sterling Japanese yen. So the big level to hold is down here at 144, 142.87, 141. The price is initially capped by this zone up here, which is that, if you remember, a rising support, now newly found resistance. So what I'll do is I will just change the color of this into red, so that you know there's no confusion. This is the resistance. If we see a daily breakout above that level, then that bearishness is negated, and then off we go higher. As long as the price stays below that level, it appears to be bearish. Now let me show you the same thing, but in a different time frame as well. So if we go down to a 4-hourly time frame, the 4-hourly time frame is creating this, what appears to be a rising wedge formation. And these types of formations, especially if they're seen in clearly defined downtrends or major reversals, as this is the reversal: high, lower high, low, lower low, lower high, lower low, lower high, lower low, lower high, and so on. And if this pattern plays out in a sense that it needs to break to the downside, so this is our rising support in 4-hourly. Sophia, how do you trade? Do you trade in like a swing in 4-hourly, hourly, or lower? Are you trading in like a intraday 15 minutes or something like that? I'm only guessing here. So if we see a loss of this support and a retest of that from underneath, like so, then bearish traders would be looking to take either a widest point of this rising wedge and extend it down. That gives them this 146 area. More speculative traders will take the distance from the previous consolidation, and there is one here. So there's one here as well. It's exactly consolidation that broke to the downside, and they would extend that to the downside to give them projected target, which is in our case 144.52. And that 144.52, it's also a 38.2 Fib retracement in end of day time frame from this a significant swing low all the way up to this significant swing high. So multiple reasons why people might be keeping a close eye on that level, and if they're sitting in a bearish camp, they're looking to take profit down here. Majority of the people who are sitting in a bearish camp are looking to put their stop losses up here. So breakout above this stop loss, and that these stop losses might be triggered. The price might go different ways. So if you're trading in an hourly time frame, the hourly time frame looks like this, Sophia, and this is pointing to you that you need to have your hourly candle, so your full candle closing here below this rising trend line for that potentially bearish scenario to gather some steam and for the bears to take control here as well. But a very good question, and it was leading us quite nicely after sterling dollar I cable. So really, really good. Okay, I'm waiting for another question, guys. We really have a few more minutes for today's webinar. You're more than welcome, Sophia. Sophia, are you using TraderCast as well? If you have a live FxPro account, you can register for TraderCast, and it'd be lovely to get you into our community. And same thing with John or anybody else. You can speak to your account manager and see if you can register for TraderCast and put in FxPro in the introducer field. Don't proceed to the payment when you see the payment log out, and I can check with your account manager, and if they say that you qualify, it would be lovely to introduce you to other guys. Yeah, great. So is there anything Brilliant. Yeah. Thank you, Sophia. I think John was talking about gold, and he was saying, "Can we talk about gold?" So maybe this would be a good time to talk about gold. Guys, this is very informal. Let's keep this informal. Ask your questions. Keep your questions coming, and then we can cover what you need as well. So gold, guys, in a weekly and daily time frame is moving higher, although we are seeing a bit of a consolidation. So excuse my charts, they're really busy here with all sorts of trend lines and things on them. But really what we are keeping an eye on is a 1320 level. 1320 level. So the big level for gold from the intraday point of view is down here. That's absolutely massive level for gold. And the reason for that is it's this rising support trend line. And it's also a level that was tested in the past. Now, gold is developing something that potentially could look like a big triangle. And we know that they tend to be continuation patterns. If they're found in clearly defined trends. So from the gold point of view, the initial upside resistance is up here, 1326, 1328 or thereabout. So if this 1320 holds and we see a breakout higher, towards this 1326, 1328, and the price breaks and maybe retests that level from the most profitable levels, just moving higher. Okay, there's no retest, they're just parabolic, they just go high. Then bulls are in control, and that would potentially open up the way for the retest of 1330, 1334, 1337, 1340, and so on. So that'll be a bullish reaction for gold if we see a breakout above that. And remember what we were talking about at the beginning. Keep an eye on equity indices and also keep an eye on dollar index, because if dollar index is weakening, then that's usually seen as a bullish for gold. If dollar index is rallying and breaking out above this 90 level, that's normally seen as bearish for gold. So it's quite telling. It'll be quite telling fairly quickly. Now the alternative is if we see maybe equity indices recover and rally, or if you have a US dollar strength. So let's say a Federal Reserve decides to hike rates very quickly. Maybe they telegraph to us that they might be hiking rates more than just 4 times that market is pricing in at the moment, then that will cause significant US dollar currency strength, and that could cause gold to sell off. In that case, if we see a daily close below 1320, that would potentially create a bearish trigger. Majority of the people who would be looking at that level would be looking to place their stops above 1326, because that's where the risk is. This is where the breakout on the upside is. So it's a logical stop level for them. And then they would be looking to target further downside towards 1317, 1310, maybe even 1300 down here. So that area is also of interest purely because it's a round number. So you have 1306 and then 1300 to the downside. Nice and round number, easy to remember. Gold was playing around that level in the past and so on. So that'll be the bearish scenario. But I believe that dollar itself will tell us very quickly which way this might go. And also we should be keeping an eye on equity indices, and if we see a continuous continuous sell-off in equity indices, that would cause gold to break out and rally and move higher. Okay, guys, we are coming to the end of today's broadcast, so I know some people are joining us late, so if you haven't seen this webinar, you're more than welcome to ask your account manager for the recording of it. It'll be on YouTube on the FxPro. We recently did FxPro non-farm payroll, and that one was also uploaded recently. So I think if we just go to YouTube, and let me just show you how to get it. So FxPro. There we go. Okay, so if you go to YouTube and type in FxPro in a search bar, it brings you to the page, and basically you have plenty of these old ones that we did. We do them every Wednesday, so you're more than welcome to come and join us on Wednesdays. You can also click on videos here, and that'll show you the latest ones that we have. And this is the one that we did for non-farm payroll, which is the last Friday, covering a range of financial markets as well. So you can get them there as well. Alternatively, you can ask your account manager to email you with the link when they get rendered and uploaded onto YouTube. So thank you all very much for watching and listening. Thank you for participating. We are back to a disclaimer page now. If you need to contact your account manager, feel free to do so. It would be lovely to talk to you again. I'll be back with you next Wednesday at 7 o'clock in the evening again. And if you feel that this could be beneficial for somebody else who trades, or somebody else that you know, feel free to invite them. You can ask them to go to FxPro landing page and register for the forthcoming webinars. FxPro.co.uk. Let me just go and show you. Oh, this is the blog page. I didn't mean to do that. Here we go. So if you go to the FxPro landing page, you can click here and register as well, or you can invite people to come in and join us as well. So thank you all very much for watching and listening. Stay safe, happy trading, and I'm looking forward to talking to you again next week. Thanks, guys. Bye.